Welcome back. Absa has announced the official combination with Barclays' African businesses and its South African Absa businesses after regulatory bodies on the continent approved the move. Well, earlier today I spoke with Chief Executive of Absa, Maria Ramos, to find out a little more about the merger and particularly why it's taken 8 years for this deal to have been done. It was announced at the time in 2005 when Barclays acquired control of Absa. Only now has it come to fruition.
Well, you know, I can't explain what had happened before. I can just say that from the time we've started pulling this deal together, which was last year, I think we've actually moved quite speedily. I think what we decided was that we wanted to bring the Absa and the Barclays Africa businesses together now in this deal, that Africa is a growing continent and one of the fastest growing regions in the world, that this really made sense, and we had started to putting together the two businesses operationally last year. We closed down the Barclays Africa operations in Dubai and brought them to South Africa, and this brings to conclusion the transaction. We took it to shareholders in December. They voted overwhelmingly in favor of the transaction, and here we are. So I know, you know, if you go all the way back, it probably feels like a very long time, but I think we've looked at this as a significantly different transaction from the one that may have been contemplated 8 years ago.
Where to from here? You are the second, I suppose, if you were to take the South African banks into Africa. Standard Bank had a jump start on you, but you certainly are ahead of the other two big four. Is it going to be aggressive expansion?
No, I think we've got a really good base in Africa. Barclays has been in Africa for over 100 years. We've got some really good businesses across the continent in some really fast growing economies, and I think what we're going to be doing now is making sure that we can take advantage of the platform we currently have in Africa. There are a couple of countries. I know you're going to ask me, your next question is going to be, what about Nigeria? I think we've continuously looked at Nigeria, and we're going to be looking at Nigeria going forward, but we're going to be working with the platform that we have in Africa at the moment, and we think we've got lots to grow in the countries that we have, and a great business. So
why has it been so difficult for South African banks to get a foothold in West Africa, and particularly in Nigeria, which you just mentioned?
You know, we've got a great business in Ghana, which is also in West Africa. And as I say, Nigeria remains on our radar screen. It's about making sure that, when we do go into Nigeria, we go in there with the right acquisition and the right business. So.
But why is it difficult? We saw First Rand slipping up last week.
I don't know about the First Rand business. I can just tell you that for us in Ghana, we've got a really good business. Barclays has been there a very long time, and so it's about, we've got a good platform and we're going to keep growing it, and I suppose that's what distinguishes this transaction from a number of other transactions. We've got, with Barclays in Africa, good solid businesses that have been there for a very long time, and we're very local, but we're also very much part of a large global group. So we can serve customers and clients both in Africa, across the world, global clients doing business in Africa, South African and African clients doing business regionally, and we know that intra-regional trade is also growing, and we can take advantage of all of that.
Are there any other obvious gaps on the continent?
Oh, I think for us, I suppose, Nigeria is the big one. But there are other economies on this continent that are growing. I think our first priority is to make sure that our existing businesses, our existing markets, we can make sure that those grow, that those generate the returns that we know they are capable of generating before we go out and do further acquisition.
So is there work to be done in perhaps bringing up the return on equity and return on assets?
Yes, I think we've said that before. I think we've said we've got a great platform, and we need to make that platform work harder for us. We think all of the we've got all of the ingredients to do that, and being part of a global group is very much part of these, you know, of what will really work for us. And then, you know, there may be one or two other things we need to do in addition to that.
You know the other side of the coin. Has it been difficult negotiating with the central banks of the various countries, Kenya, Mauritius, Seychelles, Zambia, Ghana, and so on, in concluding this transaction?
Well, I think we went into this transaction knowing that it was always going to be complex. We had 8 countries outside of South Africa, and then obviously the SARB in South Africa to deal with. And you have to go in it knowing that it's going to be, that, you know, regulators have very specific things that they want, that they need you to be mindful of. We have been very mindful of the regulatory environments in every single country that we operate in. And so yes, it has been I think a very detailed conversation and negotiation with regulators. But I have to say that in every single country, including South Africa, this has been a very fruitful, very considered engagement on the part of regulators. And I think, you know, we've got very good results out of that. We knew that it was going to be, we needed to be respectful of what regulators wanted, and our processes have respected what regulators need to achieve in their own countries.
Will you be bringing other parts of the Absa setup into the rest of Africa now? We think about things like online stockbroking as just an obvious example.
Well, you know, what we are doing is we have got a really good corporate and investment banking business in South Africa, and it's connected into the Barclays world, and that's been one of the really big parts of the original 2005 transaction, was that Barclays set up a really good corporate and investment banking in South Africa in Absa Capital, and we're going to be looking at opportunities to grow that across Africa. But there are other parts of our business that we are expanding across Africa, financial services being one of those. So the insurance business, we've really done good acquisitions in Mozambique, in Botswana, and in Zambia, and we're looking to expand that across other parts of our African business. So yes, I think we're looking at opportunities to grow within our existing platform.
As from the beginning of next month, the Absa Group name changes.
Yes, it does, and I think that's an important development, and it's also very much reflecting the fact that the group is now a Pan-African group, and so we needed to change the name. So it's going to become Barclays Africa Group Limited. So that happens on the 2nd of August.
Barclays